Hi, Todd VanDenburg here with VanDenburg Capital Management and another Uncommon Sense update. So for the last month or so, I've been really trying to get an update out about something that I get asked about every week, and that is Bitcoin or digital currencies, cryptocurrencies. It doesn't matter where I am, what I'm doing, if I'm training at Brazilian Jiu-Jitsu or if I'm on a plane. Somebody, when they learn that I do what I do for a living, they want to know should they be investing in Bitcoin or cryptocurrencies. But the goings on in the world today, they're just I can't talk about Bitcoin. What I really need to talk about today is what's going on in Europe, and that is with Russia pushing the borders of the Ukraine, and the markets are getting hit. I mean, there's no doubt. As it stands today, as of the close of the market, we've got the Dow down about 10.4% from its high. We've got the S&P down 12.3% from its high, and we've got the Nasdaq down about 19.6% from its high. So no doubt, the markets are just volatile as heck. And but I do find it interesting that the media is talking about this volatility being because of Russia, but it was only 2 weeks ago that they were talking about the volatility occurring because of the Federal Reserve. So it's like, pick something, will you? In any case, I digress. So here's what's going on. Russia is taking very real steps to take over portions of the Ukraine, no doubt, right? And it's causing a lot of tension in Europe and elsewhere that that Europe might be at war. There might be another war in Europe. And so I just want to take a second to give a little bit of perspective. And again, I'm not saying that that I enjoy what's going on or that what's going on is right or good or anything like that. But I think that we're maybe blowing it a little bit out of proportion given some things that I'm about to describe. So first off, does everybody know that the Ukraine has been technically, quote, at war with Russia for almost 4 years? Where Russia borders the Ukraine, there's been fighting going on there. There's like 14,000 Ukrainian soldiers that have died in the last 4 years fighting. They say, they're called separatists, people who don't necessarily want to be part of the Ukraine, but people in the know say that those separatists are actually being funded and armed by Russia. So this conflict has already been going on for 4 years. What's new is that Russia seems to be pushing the envelope, and now they're trying to say that there's portions of the eastern section of the Ukraine that have asked for their help, and so Russia's just being a good model citizen and coming to the aid of people that speak Russian as their primary language. And again, it's likely that there's going to be increased conflict. I don't doubt that at all. But I want to give a little bit more of a history lesson. It's 8 years ago this week that Russia invaded the Ukraine, and they said annexed, but they invaded and took Crimea. And back then, 8 years ago, remember how the media was talking about how horrible this was and how it was causing volatility in the markets and in the global economy. And you all remember that Third World War in Europe that happened 8 years ago. Wait a minute, that didn't happen. You all remember the economic collapse that occurred 8 years ago. That didn't happen. So what Russia's doing is wrong. I mean, it's just wrong. But it's not new, and it's certainly not something that I believe and that the data shows is going to have a material impact on the corporate profits of U.S.-based companies. And that, after all, is what we base our investing decisions on in the stock market, is what's going on with corporate profits, because corporate profits are what generally drive stock market prices. So I fully anticipate continuing to see even more volatility, But when corporate profits are not going to be materially impacted or shouldn't be materially impacted by what's going on in the Ukraine, the math says then we don't sell. This is just volatility. This is U.S. market makers taking advantage of some situations, be it the Federal Reserve and or conflict in Europe, to manipulate the markets a little bit. And if you're a speculator, then yeah, you should be scared, because over the short term you're likely to get hurt pretty good. But let me show you one. I'm going to show one and only one chart today. And it's a chart of what's happened in the markets since the last time Russia invaded the Ukraine and took Crimea. And what you can see is the world didn't come to an end. The markets didn't collapse. We've had many other reasons why, since that time, that people have predicted, the end of the U.S. stock market and the end of the U.S. economy, and they've not come true. And again, it's because over the long haul, and whether that's 6 months or a year or 2 years, or in this case, 8 years, generally the markets win. The markets follow the math. So if you're a speculator, meaning you're buying and selling, making short-term trades, you should be really afraid. If you're an investor, especially if you're somebody contributing to an IRA or a 401k or some other retirement plan, you should just be looking at this as a gift. You're able to buy into the markets right now at discounted prices, and 5, 10, 20 years from now, depending on how old you are, you're likely to look back and go, wow, I sure am glad that I did that. So to be clear, nothing that I see going on in Europe gives me like a sense of calm or happiness. It's never good when people are dying in what amounts to some sort of conflict. Call it a war, call it whatever you want. But I can't let my emotions and my feelings about those things get in the way of the math that drives investing. And we don't think you should do that either. So be careful, make sure that you keep your cash reserves, so you have plenty of emergency fund. Don't use this as a time where, don't think that what I'm saying is that you should take your emergency fund and dump it in the market now because Todd said it was a great buying opportunity. Please don't do that. Emergency funds are for emergencies. So emergency funds are what allow you to not have to sell in a market that's emotionally down. And so if you need to tap your emergency fund a little bit over the next few months while we work through this volatility, then that's what it's there for. Don't be tempted to be greedy, because greed is just as bad of an emotion as fear. So if anybody has any questions about this or any other financial matter, please post a comment to this update, send me an email, give me a call. I'm happy to answer any question that you might have. But that was your update. I hope you enjoyed it. Give us a like. If you did, give us a like and give us a share. And I'll be back again soon with another Uncommon Sense update. Thanks for watching. If you'd like to be the first to hear of more Uncommon Sense updates like these, please click the subscribe button below. We'd really appreciate it. Thanks again.